Hello, Conrad. Good to see you today.
Good morning, Kai. Good to see you.
Yeah, we're in the midst of the reporting season, so some of our peers have already reported numbers. They don't seem to see any pickup in demand. So let's talk about Topline first, Conrad. How has this developed in the second quarter?
Yeah, overall, Kai, we were very pleased with how the numbers have come out. As you saw, 3% decline in local currency. That was due to pricing. Our volumes overall were flat. But it's important to realize that in Care Chemicals, we actually saw strong growth, 7% volumes year on year. In Additives and Adsorbents, we saw strong growth, 5% year on year. The challenge was in our catalyst business, where we saw a significant slowdown in our new build business, as well as our refill business. But this was in line with our earlier expectations. As you know, this is a late cycle business where now we see actually the results of the lower operating rates in chemicals that we saw last year.
So our prices were down 3%. How does that compare with the general costs for our raw materials?
Yeah, what was good here is that overall our raw materials year on year were down more than 10%. So with that 3% price decline, we actually were able to expand our margins, and that continues to be our target.
And how do you see raw materials developing at the moment? Are they easing then?
Yeah, what we see with raw materials at the moment and what we expect in the coming quarters is a slight sequential increase. So year on year, we're down right now about 10%. For the whole year, we think we will be down about 6 to 7%.
But coming back to the second quarter now, volumes flat, you said, prices down. That, of course, puts some pressure on the margin. How has our profitability developed in this environment?
Yeah, that is what we are very pleased with. We achieved an EBITDA margin of 15.7%. That is actually up underlying more than 500 basis points from prior year. Part of that comes from margin expansion, margin management. You mentioned the pricing versus the raw materials. But a very important part is also been the improvements on our cost base. We have now delivered a total of 155 million Swiss francs savings versus our targeted plan of 175 million Swiss francs. So this is really a very big thank you to all in the company who have contributed to these actions.
So that means obviously that also the operating leverage is important, looking at the 3 different business units we have.
Yeah, operating leverage clearly has improved. You see that in Care Chemicals. You see that in Additives and Adsorbents. But even in Catalysts, where on 18% lower revenue, we actually achieved an EBITDA margin of 19.5%. That was only possible due to the structural improvements on the cost base that business has delivered.
And also our bioethanol business is part of Catalysts. You just mentioned that. How important was the sunliquid project in this context?
Yeah, sunliquid has helped. The 19.5% EBITDA number I just referenced is without the bioethanol contribution. But what you see is that we've been able to actually close down operations at a lower cost than anticipated. We are very pleased that we found a buyer for our Podari site, which means that some of our people will be able to work there, which is a very good thing. It also means that we can avoid some of the demolition costs that we previously had anticipated.
Maybe a last question, Conrad, on the second quarter. This was the first quarter which included the numbers from Lucas Meyer Cosmetics. Is the business as good as you anticipated when we talked the last time in April?
Yeah, Kai, it's at least as good as we anticipated. We were very pleased with how the numbers are coming in. They're running at a 23 million Swiss franc level in the quarter. If you translate that and extrapolate it to an annual sales number, they are set up to achieve about $108 million in sales. That compares to a number of slightly below 100 million. When we acquired the business, we said that would be like a 10% CAGR that they would continue to run at, and they are delivering that in the current environment. We're very pleased with that.
Absolutely. Yeah, to conclude maybe the review, let's look at the first 6 months now. So the first half year is over. What is your general view on these first 6 months versus prior year?
Yeah, the first 6 months very much in line with the second quarter. So what we're seeing is growth in care chemicals, growth in additives and adsorbents, and we are seeing these headwinds in catalyst. What we also said was catalyst has a year where now we see the effect of the lower operating rates in the chemical industry. Last year, we also see now the effect of lower new build rates. We do expect this business to return to growth again next year.
And after the first half year is also a good moment to look at cash generation. This was a matter of concern at Clariant for quite some time. How has this developed, especially since we look at next year and our guidance to then achieve a conversion rate of 40% or more?
Yeah, back in November 2021, we set this cash conversion target of more than 40% to be achieved in the year 2025. We have made actually a lot of improvements in our working capital management. We also have much more discipline when it comes to CapEx spending. And we're very pleased that over the last 12 months, we're now running already a cash conversion of more than 42%, which means more than 42% of our EBITDA gets converted into cash right now, which is a very good achievement by the team as well.
So, yeah, the team, you mentioned that. Is it because of net working capital, or what are the reasons behind this positive development?
It's a combination. So it starts actually with a higher EBITDA number to begin with. Then secondly, it is CapEx discipline. And finally, it is working capital management. All those three pillars lead to higher cash generation in the company. And our net cash result is up because of that.
Yeah, thanks, Conrad, for this review. Let's now shift the focus to the current situation and also the outlook. So current trading conditions, maybe let's start with a global view on the different regions. How do you see the whole industry, the whole chemical industry developing in this environment?
Yeah, Kai, we've talked about it many times. We need this shift back in consumer spending from services to durable goods again. And we see some of that happening, but not all of it. So it's very good to see that industrial production is actually positive again, not only in China, where it is even in line with overall GDP or slightly higher than that, but in the United States, it's clearly recovering. In Europe, we still see a negative industrial production. So what we need is these interest rate cuts to come through. You will see a positive effect on housing markets and construction markets, and in the end on durable goods spending. And that is very much needed for us to return back to solid growth. And as you know, the chemical industry is always an early barometer. So we still feel that following some interest rate cuts later in the year, we should see a solid 3 to 5% growth rate back in chemicals next year.
And talking about segments, I remember after the first quarter, you said that your hope is that especially personal and home care, but also additives, flame retardants for electronics, that they would see higher demand in the course of this year. Does this still hold true?
Yeah, that is holding true already. If you look at our revenue growth, our volume growth in care chemicals of 7% in the second quarter, that's clearly above GDP, above market. If you look at our additives growth rate, which was high single digits, that's clearly above the market. So we are well positioned with these businesses. In care chemicals, we obviously have now a very nice positioning in terms of consumer care for specifically cosmetics. In additives, we have a very nice positioning with our flame retardants for electronic products, for data centers, for electric vehicles. So these businesses should indeed continue to outgrow their markets.
And Conrad, there are also concerns how politics could influence the economic situation. Recently, you were in China and in Japan. So what were your insights traveling in these regions?
Yeah, my insight from China is actually that industrial production is fully back. So what you see in China is a GDP close to 5% and an industrial production rate that runs even slightly higher than that. We visited all of the major chemical players, also the local ones. One key takeaway is that despite these run rates, people actually are not seeing profitable operations. So what you see is there has been a clear overbuild in recent years. Capacity utilization rates are as low as 70%. And that's why a lot of the players don't make money right now. So this is not a temporary thing. At a 10% CAGR, if it were that high, this would take you about 2-3 years to actually rebalance itself. Now, the positive news is for specialty chemicals, we are not affected by this. So there isn't this overcapacity, what you see on the commodity side. So we do have a good business, but it is obviously somewhat of a concern when our customers don't make money. Japan, an interesting story. After years of modest growth, last year the company showed good growth again. And again, also industrial production up. And that's because of the lower currency, which makes the country more competitive. So I actually walked away with a very positive feeling in terms of the activity level that is clearly picking up.
You just mentioned specialty chemicals. With that, we also have a very high stake in the sustainability transformation. We talked about that a lot of times. Now, looking at Europe, I mean, with the recent elections, we saw a shift to the right, and some people are a bit concerned now that maybe the Green Deal is not as important as it was. Do you expect any negative impact on our business resulting from this shift in the parliament?
Yeah, well, the shift in the parliament needs to be put in perspective. So the center parties still have the majority. Ursula von der Leyen has her second term. She has clearly mentioned her first term was about the EU Green Deal. The second term will be about the implementation of the Green Deal, which very much needs a healthy European industry to deliver the Green Deal. And that will be very much the focus. And I'm very positive and hopeful about that.
So to conclude, maybe our travel around the globe. So looking at the US, everybody's talking about the upcoming elections. Do you expect any impacts from the elections in the US on the Clariant business?
Yeah, depending on the outcome of the elections, you may see changes in tariffs, which in the end for the industry, I think is never good when tariffs go up. It's also not good for the consumer. It means more inflation. But that said, for Clariant, we are well positioned with our global footprint, where we basically, with our 67 sites, are very well represented in all regions. In terms of the legislative environment, the Inflation Reduction Act, which is really fueling investments in carbon reducing technologies, we do not expect big shifts there. On the subsidy side, there may be some cutbacks in the event that Trump wins. But let's keep in mind that it is largely the Republican states that have benefited from this policy. So the tax deductions for every ton of carbon saved most likely will be in place and will stay in place.
Yeah, thanks, Conrad, for these insights. Maybe to conclude and to narrow this down to our own business. So what is, in summary, your outlook on the second half of 2024?
Yeah, our outlook for the second half of this year is very much in line with what we're seeing in the first half in terms of trading conditions, although we do expect a slight pickup and further improvement for our additive business. Parts of our care chemical business, in particularly crop protection, but it is largely in line. And the big thing is the step up in our profitability from a lower cost base and our margin management. And that actually led us to increase the guide from 15% EBITDA margin to 16% on a reported basis.
Yeah, thanks very much, Conrad, for your time. Let's keep fingers crossed that things keep on developing in the positive direction. Have a good day and lots of success.
Thank you, Kai.